Hi guys, so what we're going to talk about now is institutional candles. Okay, so an institutional candle is basically when one candle goes up and then there's a big engulfing candle that drops down to the downside, and obviously the same the other way. Okay, so when a candle firstly goes down and then pushed up, so that's these candles are called buy to sell or sell to buy. Okay, so here, this one is obviously you can see price pushed up. Price pushed up. Banks will put on 4, 5, 600 million to push this price up, and then a big engulfing candle down. So an engulfing candle is when this next candle is bigger than this previous candle. Okay, so we can see it pretty much all over the place. Yeah, it happens all the time, but you can't just trade purely off them. Okay, so here you can see the last down before the up move. That's institutional candles. Okay, so these are, we call them institutional because that's what they the people who use them, yeah, who manufacture, well, not manufacture them, but that's who creates them in the charts basically. Okay, so you can see here price pushed down, then pushed engulfed up. It came back down to mitigate out of this, because we know my previous video I explained that the banks are in drawdown. Yeah, they're in negative equity. They've got like some money on credit card, if you like, or in drawdown. Yeah, so I'm waiting for this to happen at the moment. So this was the bad boy that broke structure. Okay, this was the last up before the down move. Okay, so obviously price is all the way down here at the moment. I'm waiting for price to come back into this area because the banks need to come back and get their 4, 5, 6 million. So just imagine if you were in business, you're not just going to forget about all that millions of pounds, right? So they need to come back and collect it. Yeah, so I would say 90–95% of the time, if you see IPA, improper price action, which is just a fancy word for imbalance, yeah, if you see imbalance before a candle, it's protecting that candle. So it's a good sign. It's more probable that price is going to come up into there to mitigate out. Okay, I will explain imbalance in a different video. But yeah, hopefully that will break down some institutional candles for you. So that's pretty much all to it for the candles. Let's maybe try and find a few more. Here, down, up, broke, above, came back into it, yeah, mitigated, and then bought, shot up. Okay, so here we can see, obviously, like here, you can see it's prime example. The candle does not have to be engulfed every single time. Here's a price pushed up. It did drop, and then we got price came back into that area. Yeah, you can see this lines up with there, and then dropped. Yeah, didn't drop huge amounts, but still you could have taken a trade from it. That would have been nearly 80 pips. If you're looking at this, that's wrong. You need to change the decimal. Yeah, so 789 is 78 pips basically. Yeah, yeah, that's we leave it as that, as institutional candles for now. Obviously, just bear in mind on it works on every time frame. Here we've got one little, and it doesn't really matter about the size of it. It's, there goes one up there and dropped. One there and then dropped. Yeah, they're all pretty much been engulfed left quickly. Yeah, up and shot down quickly, dropped down, broke structure, broke structure. Yeah, what happened? It came perfectly back into there. So if we mark our institutional candle out, banks push price back up, or the robotic system, the algorithm doesn't like gaps in the market, so come up, fill that gap, came into there and then dropped off. And this is where we want to try and get in on a sell. The same again here. See the big candle down before the up. broke structure. See, there's a wick here. In there, there'll be obviously on a smaller time frame, there will be bodies, candle bodies. Yeah, and then it came back down into this candle. Remember, what we like to concentrate on the institutional candle is open of the body and 50% of the body. Okay, open obviously is where it starts, and 50% is obviously self-explanatory. It's 50%. Yes, price came back into that area, and then we could have bought from there on a buy. Okay, you could have done that. That was one chance, and then your second chance would have been this candle. Yeah, so this down again before the up, broke structure again, came back down to collect that money, and then bought again. Okay, so hopefully that will explain institutional candles for you guys.